Hello, everyone. The New York Stock Exchange has wrapped up for the day, and Bigbear.Ai Holdings Inc. officially closed at $7.42 on Friday, October 17, 2025, marking a daily decline of about 3.6%. In after-hours trading, it dipped slightly further to around $7.48. To many casual investors, that might look like a red flag, just another rough day for a volatile AI stock. But if you dig deeper, you'll realize this recent price movement is happening within a much bigger, far more interesting story that's unfolding quietly behind the scenes. While retail traders jump in and out of positions based on short-term news or social media buzz, something very different has been going on. Major institutional players like Vanguard and BlackRock have been steadily and very deliberately accumulating shares. Their combined ownership now makes up well over 10% of all outstanding shares, a sign of long-term confidence that you just don't see from speculative day traders. This steady institutional buildup hints that Bigbear.Ai isn't being viewed internally as a short-term trading vehicle, but as a strategic long-term play in one of the most critical technology sectors of the coming decade. This sets up a fascinating dynamic. On one hand, Bigbear.Ai behaves like a high-volatility momentum stock, swinging wildly between its 52-week low of $1.51 and a high of $10.36. On the other hand, you have patient, long-term capital treating it like a cornerstone investment in defense-grade artificial intelligence. Two completely different mindsets colliding on the same ticker symbol. Many retail investors still see Bigbear.Ai as just another speculative name riding the wave of the AI craze. After all, it did deliver a mind-boggling 328% one-year return at one point. Combine that with a beta of 3.18, and it's easy to label it a meme-like high-risk, high-reward play. Trading activity among smaller investors has exploded, up 150% in the past month alone, turning Bigbear.Ai from a quiet defense tech name into one of the more talked-about AI stocks across trading forums and social platforms. But that narrative, that this is just another hype-driven AI play, is missing the real story. Bigbear.Ai isn't simply an artificial intelligence software firm chasing consumer trends. It's actually a decision intelligence contractor that's deeply integrated into the U.S. government and defense ecosystem. Their focus isn't flashy consumer apps. It's mission-critical intelligence, logistics, and predictive systems that help decision-makers make faster, data-driven calls in high-stakes environments. Recent partnerships show exactly what that means. Their collaboration with Second Inc. focuses on developing AI-enabled edge infrastructure for battlefield operations, not something you see from your average tech startup. Then there's their SMX partnership with the U.S. Navy's Fourth Fleet, designed to improve maritime domain awareness. These aren't marketing stunts. They're real, operational contracts tied directly to U.S. defense interests. And unlike most speculative AI companies, these deals represent stable, long-term, high-value revenue streams. Now, let's talk about what's been happening with the stock itself. On Friday, Bigbear.Ai opened trading at $7.50, hit an intraday high of $7.73, and slid down to $7.10 before settling near 7.42. Volume was massive, around 127 million shares, far higher than its daily average of about 117 million. That kind of volume tells a story, profit-taking after a strong rally. The stock had climbed nearly 44% over the previous month, and traders who bought in near the 5 or 6 range are cashing in as prices approach resistance in the high $7 to $8 range, an area that's been a ceiling multiple times before. Technically speaking, the $7 Zoro level is now a crucial area of support. If that breaks on high volume, we could easily see a quick retest of lower levels from the last correction phase. The stock's run from its 1.51 low to over $10.0 in the past year is impressive, but that kind of parabolic move always invites volatility. For now, we're witnessing a tug-of-war between momentum-driven bulls and profit-taking bears. But the volatility isn't just about technical charts. It's also rooted in fundamentals. Bigbear.Ai is still unprofitable, and that's no secret. Their most recent earnings report for Q2 2025, released on August 11th, was mixed and raised some eyebrows. The company reported an EPS of $0.49, a major miss compared to analyst expectations of $0.6 per share. Revenue came in below forecasts, and while management emphasized positive developments, investors were left questioning the timeline for profitability. The gap between reported and expected earnings underscores the challenge. Yes, Bigbear.ai is growing revenue, but costs are climbing rapidly too, especially SG&A expenses and integration costs from acquisitions like Pangea. There are also significant non-cash charges, which can obscure the company's actual financial health. Management has tried to redirect attention toward adjusted EBITDA, which turned slightly positive at $0.9 million in Q3 2024, suggesting operational improvements. But on a GAAP basis, profitability still looks distant. This is where short-term traders often underestimate the risk. The next earnings report, scheduled for November 10, 2025, could be a reality check. Analysts currently expect 0.07 EPS. Any major surprise, whether positive or negative, could send the stock sharply in either direction given its high beta. For Bigbear.ai, every quarterly report is a potential turning point. Now, what exactly does this company do that has everyone paying such close attention? Bigbear.ai builds what it calls decision intelligence solutions. In simple terms, their AI-driven systems take in massive amounts of unstructured data, from satellite images, logistics updates, intelligence briefings, or surveillance feeds, and turn that chaos into clear, actionable insights. They specialize in helping agencies and organizations gain what they describe as data-driven decision dominance. As of September 30, 2024, the company's contract backlog was around $437 million, much of it tied to long-term, non-cancelable U.S. government contracts. That's an incredibly stable foundation compared to many other AI companies that depend on fickle consumer demand. In essence, Bigbear.ai's base business is backed by the reliability of the U.S. defense budget, which gives it a level of security that pure commercial AI players can only dream of. And yet, Bigbear.ai isn't standing still. The company is also pushing aggressively into commercial markets, which could become its biggest growth engine. Acquisitions like Pangea open doors to new verticals such as digital identity verification, global trade security, and supply chain analytics. Their technology is now being applied to optimize logistics, enable predictive maintenance for industrial clients, and even enhance airport and cargo security. A perfect example of this is their Panama Cargo Security Project, a real-world demonstration of how their AI systems can scale globally. This expansion into commercial and international markets offers the potential for faster revenue growth and diversification, something Wall Street always rewards if it's executed properly. But, of course, with opportunity comes risk. The biggest financial risk right now is shareholder dilution. Because Bigbear.ai is still burning cash, they've relied on secondary offerings to raise capital. That means issuing more shares, which reduces the ownership value for existing investors. This threat of dilution acts as a constant ceiling on price rallies. No matter how good the narrative sounds, traders remain cautious when more shares might hit the market. Analyst sentiment also remains conservative. The average Wall Street price target sits around $5.83, meaning analysts currently see the stock as overvalued in the 7 to 8 range. Their skepticism comes from traditional valuation models, price-to-sales ratios, lack of profits, and expectations for continued losses through 2025 and 2026. So, we have a unique standoff. On one side, institutional investors and long-term bulls betting on the company's AI and defense potential. On the other, analysts warning that the fundamentals don't justify the valuation. This clash between growth optimism and financial realism defines the entire Bigbear.ai debate. Looking forward, the Q3 2025 earnings report on November 10th will be a major catalyst. Investors will be watching for three things above all: revenue growth exceeding expectations, a narrower net loss, and any update to full-year guidance. If the company maintains or raises its guidance, it'll signal confidence and solid contract execution, likely sparking another wave of bullish momentum. But if guidance is cut or results disappoint again, the stock could face a harsh pullback, especially given its current valuation premium. Beyond earnings, there's another factor worth monitoring: new defense contracts. Historically, large multi-year government deals have been some of the most reliable catalysts for this stock, instantly boosting investor confidence. These contracts, not commercial partnership announcements, are what prove the strength and stability of Bigbear.ai's core business. In the end, Bigbear.ai stands at a crossroads between two worlds: the volatile excitement of an AI growth story and the steady reliability of a defense contractor. It's a rare hybrid that's hard to categorize, which is exactly why it's so polarizing. Traders chasing quick gains see opportunity in the volatility, while institutions see long-term potential in a company quietly integrating AI into the nation's defense backbone. So as we approach that next earnings report, the key question isn't just whether the stock will go up or down. The real question is whether Bigbear.Ai can finally prove that its AI-driven defense intelligence model can evolve into a sustainable, profitable business. If it can, then today's volatility may one day be seen as the foundation of a much bigger success story. If not, it remains a cautionary tale, a reminder that in the AI sector, not every breakthrough translates into shareholder value. Either way, Bigbear.AI's next few months will be critical, not only for investors, but for anyone watching how artificial intelligence transforms the landscape of defense, security, and data-driven decision-making in the modern era. This is not financial advice.